if you want to be good at picking stocks, the best way to do that is to look at a lot of stocks, turn over a lot of rocks.
This is Nicholas, a former sell-side analyst who left investment banking to build Atrium Research, an equity research firm focused on undercovered public companies. And in his personal portfolio, Nicholas achieved a performance of 27% returns in 2025. In this episode, Nick breaks down, 1, what he looks for in small cap stocks, why management quality and capital structure matter more than most investors realize, and a few opportunities he sees in the market today. All right, before we jump in, Nicholas has a lot of expertise around finding some underfollowed small cap stocks. And so I put together a framework of notes based on this conversation about what he goes and looks for in finding these opportunities. So if you want to get this, click the link in the description and you will get that resource. My first question for you today is, who are you and what do you do today?
Sure. Yeah. Thanks for inviting me on the show. Excited to be here. So what I do right now is I run a company called Atrium Research, which is a sponsored equity research company. So myself and my partner, Ben, we started it about 3 years ago. We were both sell-side research analysts prior to this. We were working at an investment bank, and we kind of got the idea because we saw that there are a lot of companies out there that don't get research coverage from the banking ecosystem. So there's a lot of companies that are underfollowed. There's no estimates out there. It's hard for investors to get up to speed without having that research document on them. So we thought that the sponsored model was where the puck was going. We started the company. So what we do is we try to find companies that aren't really loved by the street. They don't have analyst coverage, or they have one or two analysts covering them. And we try to use research as a marketing tool for those companies. So we'll provide a product that's very similar to the sell side. So we do the initiation report, we do updates throughout the year, we do interviews with management, and we have a target price, estimates, and so on. And we make that research freely accessible to everyone. So we have that up on our website. We have an email list people can subscribe to, Twitter, X, LinkedIn, Reddit, all the different social medias, YouTube channel. We do our interviews with management. So our goal is to really partner with companies that need that extra push in getting the name out there and the stories that we really believe in, and using that research as a way to get that story in front of new investors, both retail investors as well as institutional from all over the globe. So we cover about 35 companies today, maybe a bit higher than that now. We had a couple new initiations. And I'm responsible for our diversified industries coverage, which includes a lot of industrials, as well as consumer and a little bit of technology.
Sounds good. Yeah, actually, just going on the Atrium Research website there, and even when you go to kind of subscribe to you guys is through the website, it said diversified industries, and then metals and mining is maybe another big sector you guys are focused on.
Yep.
And then personally through your X, I saw that you actually do some, investing on your own. Is it your own money that you're also investing, kind of share portfolio updates along the way? And kind of curious how you kind of came to your investing style as it is today and how that's performance has been.
Yeah, sure. So on the first thing, the metals and mining, that's my partner, Ben. He, as well as someone else that works for us, Riley, they cover our metals and mining division. And yeah, that's about 2/3 of the business. You should have another podcast with one of them in the future, because that'll be an interesting show as well. But yeah, that's definitely a great market that we're involved in. We've been involved for many years now, and it's really starting to get those tailwinds in the last year or so. On the personal investing, I have my own personal Twitter where I just tweet out different ideas that I have, different updates on my portfolio, what I'm buying, what I'm selling, my thoughts on different companies. And kind of how I got into all this is, I guess the first thing I did was in high school, I just joined my school's investment club. I think just because they were, serving pizza and chocolate. That was my first way of getting exposed to it. I didn't really think much of it. Then I went to university, studied finance, and just grew a love for analyzing companies and picking different stocks, right? Investing in my own money and then taking different classes, doing stock pitch competitions, investment clubs, and so on. And that really just sparked the interest for me. And, I went down market cap as time went on, looking for more upside, better opportunities out there. And then, eventually I did some internships in the space as well while I was in university. And then when I graduated, I joined an investment bank as a research associate. And that's kind of where I went from there.
Yeah, that's awesome. I wish my school had an investing club to
Yeah.
wasn't so fortunate, but that's awesome. So when you do have that focus on, say, those opportunities that have kind of the bigger upside, maybe those smaller micro caps that you kind of touched on, is there a certain process that you're following to go from, okay, I'm going to look for this specific thing to find the opportunity, and then when I enter, I'm looking for this kind of action on a chart? Or do you have some sort of scientific process, or would you describe it more as an art, or kind of, just walk us through that process?
Yeah. Yeah. I think it's definitely more of an art than a science. But what I think a lot of people confuse is that small cap investing is very similar to large cap investing, but there's key differences. So all those standard things you look for when you're doing large cap investing, growth, margins, cash flow generation, all that still applies, but there's just other things you need to look at. Firstly, being the management team. Because these are smaller companies, the CEO, the CFO, the people running the business are a lot more important to the growth. So you have to have a management team that you want to back. Either they have skin in the game or they have a really good experience or track record in the past that you want to get behind. So that's something I always like to emphasize on the small cap side. I think share structure is also something very important because a lot of these companies are raising money, or there's warrants out there, or people blow up their balance sheets. So I think a focus on both the balance sheet and the capital structure is also something that, small cap investing, it becomes more important. And then valuation, I think that's also an area where you can find a lot of discrepancies in the small cap market. As we know, small caps traditionally, the past 50, 100 years traded at a premium to large cap companies, and they outperform them. So nowadays that's flipped, right? So you're able to find a lot more deals in cheap companies in that space. So those are kind of three things that way I would differentiate the research. But generally, a lot of the same things apply, but just your risk reward is way out of swing when you would compare it to some of the larger companies.
For sure, for sure. And kind of to shift gears a little bit and talk about maybe any current holdings that are in your personal portfolio or that you've recently researched. I did see that you guys at Atrium had one of the top stock pitches for 2025. That is on joinyellowbrick.com. Thought that was super cool, but was interested to hear any of your current, opportunities that you find exciting that you're currently in or researching or have, in the recent weeks.
Yeah, sure. I'll tell you about some that Atrium are involved with because people can go check out the research. But yeah, firstly, Santa Cruz Silver was it was the second best performing stock on Yellow Brick. It more than 10 bagged just in 2025. So that was an opportunity where it was a silver producer. The commodity did really well during the year, but the company also executed well on growing production slightly as well as decreasing their costs. So they had a massive leverage to the silver price. And they delevered their balance sheet. They negotiated a couple of great things on the balance sheet, and it worked out really well for investors. And we still like the company going forward. But again, that's more on my partner Ben's side. People can check out our research. But on my side, there's a couple that I think are important right now. Firstly, being Rubicon Organics, which is a cannabis company. It's a space that we've been doing a lot of research on, and maybe just for some background, the cannabis industry from an investor perspective is really at an all-time low. People have really been burned through the legalization process here in Canada, as well as with the U.S. stocks as well. And the valuation of some of these companies has gotten really low, and that's why we started looking at the space. And the industry is still growing, right? So it's still a good pocket of the market to be in, and a lot of the companies are bad and not quality investments, but you can find a couple needles in the haystack, and Rubicon is one of those. So The company, it operates in the premium segment of the market, so it has some of the top premium brands here in Canada. Um, and really, why we like the company is ever since it went public, it's grown every single year. It's posted a really strong revenue CAGR. It's been profitable for the last couple of years. It's been able to do that consistently. And what the catalyst has really been, and it is going forward, is they purchased a new facility out in British Columbia that's going to increase their capacity by about 40%. So they have the facilities now to keep that growth going, and the balance sheet's clean. It's a very cheap multiple. You're paying mid-single digit EBITDA multiple for a high quality business in our view. And the team, it's a great team behind it. A lot of people on the team have backgrounds from CPG, much larger companies, which you wouldn't expect would be on the board or the management team of such a small company like Rubicon. So people can check out our research on that one. I think that one is one of our top picks for this year. Another one that we recently initiated on back at the end of November is Diamond Estate Wines, which is a wine company. And why we really like it is they've gone through a turnaround. And the thing with turnaround investing, it's very hard to figure out when these turnarounds are going to happen. And the nice thing with Diamond is that they've already made it, 50% plus, maybe 70, 80% through the turnaround. And now they're bearing the fruits of their labors. So the wine industry, I think of it as maybe a slowly melting ice cube where things are declining very slightly year over year. But Diamond has really found a niche in its market where there's a couple different factors in their tailwinds. So firstly, they have an outsized share in grocery. So in Canada, about 5 years ago, maybe about 8 years ago, they opened up the convenience stores as well as the grocery stores to sell wine. So Diamond has a large market share in that division, which is one of the growing pockets of the market. And they do that through one of their partners, Lassonde Industries, which owns about 50% of the stock, which is one of the largest juice companies here in Canada and globally. So that kind of gives them some clout and some positioning in those grocery stores and convenience stores. So that's kind of been supporting their growth. And then we have the whole Buy Canadian initiative. All the US wine is off the shelves here in Canada, in Ontario at least. So that's also a tailwind for them. And their margins have really turned around. So just a couple of years ago, gross margins were in the 30% range. Now they're over 60%. They were unprofitable. Now they're profitable on an EBITDA basis and will be break even profitable on a net income basis this year. So given what's happened here, I think the management team has got a lot of credibility for what they've achieved. And yeah, either this company is going to be acquired or it's going to get some more eyeballs onto it as they keep executing on this turnaround. So it's also one of our topics for the year.
Awesome. Yeah. Thanks for sharing those. Super interesting. Just something that comes to mind really when you're talking about those opportunities and kind of the research and looking at the work you guys produce at Atrium is kind of what kind of tools or data or, during your research process on these companies, on these opportunities, is there any sort of media or any tools or?
I think the main one, and I think it grows every year, is just reliance on X or Twitter to find new ideas and find people's opinions on things. I think you can find so many great ideas on there, stocks you've never heard about in different countries and with different ideas from like very credible people from the most part. So I think curating your own feed and being able to follow people that have similar investment criteria as yourself, that's always a great thing to do. And then hear people's opinions when a press release comes out. Hopefully people are tweeting about it. And then, yeah, we use kind of the standard things is the company filings. We use CapIQ as our data source just for looking at multiples and different things. So in Canada, we have a website called ceo.ca. That's very useful here. That one, you can get all the press releases, the insider filings, things like that. But it's a super active chat or forum rather, where you can look up any company and you can kind of see what's going on there, and it's kind of a good aggregation of chatter and whatnot, and I find that pretty useful as well to hear about people's perspectives and the sentiment out there on the market.
Cool. Well, absolutely. Cool. Well, just the last question here before we wrap up here is, just kind of any advice you would leave to maybe other investors that are maybe just starting out or looking to improve, or maybe something you would tell your younger self if you could kind of stand on his shoulders.
I think the main thing is just getting in more reps. When you're young, you think it's all theoretical, and you want to read the textbook and you want to read the definitions of all the different terms and how to calculate free cash flow and how to do a DCF and whatnot. But I think the more important thing is just getting in the reps of analyzing companies. If you want to be good at picking stocks, the best way to do that is to look at a lot of stocks, turn over a lot of rocks, kiss a lot of frogs, all the analogies, um, and just invest your own money. And if you lose money, you lose money. If you make money, you make money. You learn along the way. It's all great, good learning experience. So I think young investors is just try to turn over a lot of rocks, look at a lot of different ideas, and get the reps in, because you don't learn this kind of stuff from a textbook or from a professor. You learn by actually doing it and being involved with the markets.
Absolutely. Well, sounds good. That's the episode. Thank you very much for coming on. And I will link your, what is your X, and then atriumresearch.com, or is it
.ca.
.ca? I'll link that down so everyone can go check out you guys and read, the good research you guys do. So that's the episode.